Hey, good morning, everybody. So this is going to be the watch list for Monday, January 27th. Now, this week is going to be very interesting in that we have some big news events. So let's start with the economic report first and foremost. Monday's kind of light where all we have is new home sales. I think we're all going to be in agreement that home sales are probably marginal at best. A couple reasons. One, mortgage rates are back above 7%, so you don't have a whole lot of people going out and saying, let me get a new home at those interest rates. Not to mention that new home buyers are back at a record low. So I don't think this number will disappoint the street. If it comes in better than expected, that could be really good, but shouldn't really impact the trading day. Tuesday, we have some news before the market opens, durable good orders, also minus transportation, and then we have the home price index. Well, we know home values are not coming down. Now, maybe they've come down in a couple of cities for a multitude of reasons, but overall, housing is very, very strong. So what do we want to watch? Probably the biggest number is going to be this consumer confidence number, which is going to be 30 minutes into the market open. So I would definitely not want to be in a trade when consumer confidence hits. I would anticipate that it's going to be strong. So obviously, everybody is buying up this market at new all-time highs on changes that are yet to come from the new administration. But we haven't seen what really any of those changes are. A whole lot of executive orders, many of them being shot down already with the legal system. So I think we're going to have a lot of back and forth this year with the overall market volatility and sentiment. The big day is going to be Wednesday. So as you all know, I will not be trading Wednesday morning. I never trade on FOMC days. There's just really no reason. So what you'll find is that premiums will be exceptionally expensive and overly volatile, and you will just trade within a range, especially as we come up to the meeting. Now, when do I trade? I will trade when Powell is usually done speaking. So you're going to, again, see elevated volatility during the press conference, which is 2:30 p.m. Eastern Standard Time, 11:30 a.m. my time here on the Pacific Coast. But I would typically wait for him to end. Now, after the last press conference, depending upon what he says and what all eyes are going to be on is clearly inflation. Two, are they going to lower rates? I am not anticipating that they are going to lower rates. I mean, there's really no reason to lower rates right now at this point in the cycle. Sure, inflation is about 2.6%, 2.7. Are they at their 2.0 target? Absolutely not, but they're also not at 3 and 4%. So there's no reason to raise, no reason to lower, and then the market, is really moving along nicely. Now, the other thing that he has to do is he has to wait and see what the new administration is going to do with tariffs, because that could dramatically impact inflation. So he's not going to want to lower rates, have lots of tariffs come into play, inflation skyrockets, and then he has to raise rates. So I think this one's going to be a wait and see. Let's see what he says. He was very adamant, Jerome Powell, that he is not stepping down and that also the President of the United States cannot remove him from his position. So he is going to serve out his term unless who knows what could possibly happen, but he's not stepping down, and he's going to hold steadfast that he's going to get this job done regardless of what the new administration does. So should be a really big tug of war on Wednesday. Let's see how that plays out. Thursday, we got GDP, we have jobless claims, pending home sales. So again, not so much the home sales, but I think what's going to be all eyes on are the jobless claims. Is unemployment going up? Is it still coming down? Clearly, if the job market is strong and wages are up, that could be inflationary pressures. And therefore, again, back to the FOMC, what did he say the day before, and how is he going to respond to that? On Friday, personal income, personal spending, we got PCE, core PCE, so some big numbers to watch. The good news is they all drop before the market opens, so I think we'll be perfectly fine. The other thing that we have going on this week is this is going to be the start of tech earnings. So let's take a look at that. And I'm going to cover some of them this afternoon so that you can kind of gauge, well, how would you play this? So what we want to be cognizant of is we have some big names that are going to be reporting. We have SOFI from the bank's perspective. A lot of you have been watching that over the past few weeks, and I've been commenting on it. We also have Starbucks and Boeing. I'll talk through them. We have Tesla, Meta, Microsoft, IBM. We also have Apple and Intel. Intel has been an interesting one back and forth. And then we're going to start with the energy names on Friday. Now, energy has been under a lot of pressure lately, but I think that one could also give us some opportunity to the upside. So with that, let's go ahead and get into some of the charts. You will note, I'm going to start with SPY here, is that every time we get to a new high, they automatically sell the market back off. So we had a couple of opportunities with that this week. If you'll look here on Thursday, made a new all-time high, then it made another new all-time high, and then it sold off. So my price levels, and I'm not a fan of trading at all-time highs. And the reason you see this happen and this significant drop is nobody wants to be left holding the bag, buying the market at an all-time high. Right? I mean, it just makes good common sense. So what would you love to see? Love to see a pullback. So for me, I kind of have this zone right here where 608.19, 607.91, you'll see that they can't hold above it. And then they do hold it and it moves higher. They use it as support. But then when they break lower, they come up and retest it and then trend lower. So for me, what would I love to see? Well, if I'm going to go short, I needed to make sure we are not going to get above this zone here. If we do, then I have to get out if I'm in puts, right? So the market's going to do one of two things. One, it's going to come down here. It's going to retest this, go lower, come up, go down. Or what the market will do is it is going to try and test this level again, come down, get into the level. You might see some consolidation back and forth, right? So they want to make sure that it's going to hold before they break it higher, hopefully retest, and then they're going to go back for this all-time high. So kind of watch this zone right here. It's fairly strong in that they push up to it, they push up to it. Again, they used it heavily as support, then they rejected it hard, and now they're rejecting it again. So I try not to have a bias, but a lot of it is going to come up to how is the market feeling going into the FOMC rate decision? What are the predictions for a cut? Stay neutral, possible hike. I don't think they're going to hike. But if you get below where they've tested this level in the past, you know, kind of this pivot down here at 606.90. And so for me, you guys know that I'll use an interim level color just to kind of set this because my solid on my daily 4 hour and 1 hour are the yellow lines. And then if I do an interim level at a 15, that's how I would play this. Now, let's just take a look at the supply and demand. You can see that it kind of lines up where if we get above this zone, there's no sellers until we get up here to 609. So we have some runway to the upside back to the prior all-time highs. Now, if we break below the 1 hour zone of buyers, which again is approximately my 606.90, right? See how that lines up? Then we're going to come down here to 606.22. But these are only 30-minute zones, 30-minute, 45-minute, 30-minute. They're fairly weak. So I definitely would leave the 604.32 as an overall price target. Let's take a look at the triple Qs. Again, we have a lot of earnings this week with the tech companies. They push up. We're going to just shut this off first. You can see they push up to this 533 number, and then they keep rejecting it. Now, the 533 is all the way back here from a pivot that was used as resistance, support, turn to resistance. And then again, we're back up here where they can't hold it any higher. So I wouldn't want to be going long unless I could really get above 533.82. But they push it, sell it, push it, sell it. Now we are back below the 530.61 level that I had. So you can see they're kind of bouncing it again at an interim level right here. So I'm going to just go ahead and throw that on. And this is where this can become helpful, you know, on a 15-minute time frame. I don't like to chart these normally, but when you can see it's holding, it's holding, it's holding. Now we get below it. You can see they pushed up to it in the pre-market, and then it failed, come back up, and then they gapped it somewhat higher. So we fail 528.15, then look for 527.79 to hold. If that doesn't hold, I'm going back to my interim lower level of the 525.40. And you'll see again that was a prior pivot here intraday, and then they held it and then used it as support. And then my ultimate price target, and this has been a very, very strong line in the sand, 523.64, 523.52. This, I would definitely be looking for a bounce, okay, if we get there. But you can kind of see what the market is doing overall. Let's go ahead and take a look at a couple of individual names. So I'll start with those that are doing earnings. SOFI, there was a huge order of the $20 calls. Now, they're announcing on Monday morning, I believe, before the market open. So you will either catch this to the upside significantly or a drop lower. Now, if they don't hold and report good earnings with guidance, then I definitely think if we lose this $17 level, they're going to push this stock all the way back down to $14. Take a look at it with supply and demand. You can see overall, this one, again, is very knee-jerk reaction. So, premiums will move pretty darn quick. But we're at a balance here, and we're at a balance because of earnings. So what you're going to want to look for is if we can get above the $18.43, then we're going up into the $19-20 range. If they fail this $17.68, then definitely down to 17. And with this company, if it's not good, it's usually bad, right? So then these buyers will get evaporated pretty darn quick because nobody's want to catch a falling knife. So let's go ahead and take a look at Boeing. Boeing just continually keeps having bad news. So I would look for a short on this one. If we break below this 174.38, we'll just kind of go ahead and tag that here so that you can see it. This, again, if we lose 174.33, 38 area, then I would definitely want to come down here to the 171s. I would be buying the 170 puts. So as soon as they seem to be gaining momentum, there's always something that comes out on them. Now, they also have earnings coming up on Tuesday, so kind of watch and see how the market reacts on Monday with momentum or pressure. We definitely have more selling pressure up here on a 4-hour time frame than the buying pressure down here on a 3. Let's take a look at Starbucks. Starbucks was another one that gapped up insanely off of the new CEO who was coming in, but are they going to be able to deliver? Now, the other thing I would also keep in mind too, if you might have not noticed, is that coffee is now trading back at a ridiculous level. It's extremely expensive, so their cost of goods is going to go up. We have a huge gap below where the market gapped up on that new CEO announcement. It pushed higher all the way up to $103 a share, sold down to 86. We are bouncing off the top of the gap fill here. So this is another thing to always watch. Wherever you have a gap on the daily, that's the only place I look at it, the market will use that as support to head higher. Now, if, again, this is another earnings announcement play, so I would want to see what they got to say on Tuesday. Not sure that you're going to get people that are going to be stepping in front of this thing to buy it at $100 a share, when it was just so poorly performing forever. So I think you got to get above the 99.50 level to push back to these highs here. Now, if we were to go and look at this on a daily basis, you could see that, Starbucks all-time high was 126, but they better have some really darn good numbers. Otherwise, I would be short this back down to the top of the gap fill at about $86 a share. We have Tesla that's going to be announcing earnings. So let me grab that one. This one, last earnings, this stock was trading at $200 a share off of earnings. We went all the way up to 480 in 90 days. Now, a lot of that was predicated, again, on the new administration and what Elon Musk would have to kind of say he would have with regard to EV and so on and so forth. But Trump has made it pretty darn clear that he wants to remove that $7,500 tax credit for EVs, which would possibly, be a big hindrance on Tesla sales. And then there's been a lot of controversy lately with Elon and how he's gone against the president and contradicting some of the president's thoughts around AI and spending and so on and so forth. And I think that's going to be a very tenuous situation. And the White House even put out a press release that you need to listen to the president and not Elon Musk. So this is going to be a very strong level to hold, 400. If we break 400, then I definitely think you could go lower, to these prior pivots down here at 380 and then break 380, 362. Now, I would not necessarily be betting against him going into earnings. If he blows the numbers out of the water, then we're definitely going 460, 470, 480, possibly even 500. Okay. So a little patience on this one. This has been also a good one to just trade during the day because you have very well-defined price levels. You can see when the sellers step in, they pump it on the market open or in the overnight, and then they sell it off. And they've been doing this over and over again. So keep an eye on this one. Again, volatility is very high on this names. Premiums move very, very quick. So you cannot be going in with a ton of contracts. And they're fairly expensive, right? So I would not be going in with more than 3 to 5 contracts because your fill price, remember, is going to be quite volatile. But we're in a fair amount of overall demand. I would not be shorting this. But if you can get below, this 404.80, 405, I think you have room down to 400 and then probably a pretty solid bounce there going into earnings. Let's take a look at Meta. Meta was trading at an all-time high again on Friday of last week. They pushed it all the way up here to $652, and then they precipitously sold it off. So again, these are some really good intraday trades, depending upon how long you trade for. Now me, I'm done within the first 2 minutes of the market, but you can see what the market did. The market pre-market pushed it down to my price level of 630, and then they literally took it straight up. This would have been a fantastic call trade last Friday, okay? And then, we got a little bit of a pullback, and then they got the second wind, pushed up, and then it came down, and then we'll see what the market does pre-market on Monday. But I would be looking for us to come back down to this 530 number to retest this before we go higher, but you never know. Let's take a look at Apple. Apple has had multiple price downgrades. So this one, again, interesting, pushing it up in the overnight hours. And then on Friday, they literally sold it off pretty much the majority of the day. So you can see what we got here. If we can't reclaim 527.11, my price target is 215. The street price target on Apple is 200. So we are going to be significantly lower. Now, these downgrades came earlier in the week, and you could see what it did. It was up here at 250. They pushed it down. We came to 232 where they were consolidating. We pushed down then to 230. They pushed it all the way back up, and now we're coming down, and we are, again, a high, a low, a lower high, a lower low, a lower high, a lower low. So we are not reversing this trend unless they can get above 227.11. I would not be going long in this. I would expect us to make a lower low. So you can see this on the charts, what they're doing. We have a high, a low, lower high, lower low, lower high. Don't fight the trend. I mean, this is not a time to get greedy. So this is why I would say my price target would be here at 215. And those are the puts that I would be buying this week on relative weakness. I do want to take a look at a couple of the energy stocks. So ExxonMobil, we're at a fairly strong support level, or we're approaching it at 108.18. I think there's some opportunity here for a bounce. But if they lose this 108, then I think we're going to 104, and then we'll go back to the psychological number of 100. So energy has been weak. It will, every once in a while, it'll get a little bit of a pop higher, but then we're coming lower. The other thing, too, if you watch, you have a left shoulder, a head, a right shoulder. Traditionally, this should head down to 105. So again, weakness in oil, I would be buying the 105 puts. And then if you take a look at, let's do this on a 4-hour chart, just to see where we're at. So if we were going to take a fib level from a pivot low to a pivot high, you could see we did not hold the 50% fib retracement at 109.42. If we lose 108.34, which is right in line with my price target of 108.18, then I'm coming down to 106.80. And then if we lose 106.80, then 104.93. So if they don't hold the fib level, which again, the trend right now is down. It is not up. So you could get a bounce here, but I would wait for the bounce to come up and then ultimately look for us to fail lower. One of the other stocks that's holding actually better on a chart perspective is Chevron. So this is going to be an interesting one where we had a lot of support down here at 104.89, 105 area. What I want to watch on this one here is taking my fib from the pivot low to the pivot high and thinking that we're probably going to keep retracing lower to 151. So you could, again, weakness in oil, take a short down to 151. If we don't hold, then 149, we don't hold 145, so on and so forth, right back to 140. Now, mind you, they do have earnings coming up here on Friday, so you have the entire week to kind of watch what oil is going to do. But if we get a bounce here, could definitely be an opportunity to go higher. But right now, this would be my short target because I am definitely between very strong price levels up here. Let me go ahead and just drop a pin so you can see where that's at. Right here. See how we can't break above? We barely get above it. They're using as resistance, resistance, resistance. So then my price target is going to be down here. So this week, I think you're going to have to exercise a tremendous amount of patience. I would not leverage up. January is coming to a close. We only have, 5 days left in January. So there's no reason to be a hero in finishing out the month, right? Let's see what the FOMC says. Let's watch how tech earnings play out. And then I think you'll be much better positioned going into February and March based upon, again, more changes that could potentially be coming from the administration. So when you have clear line of sight, it just makes the risk to reward so much better. So with that, everybody, I thank you for your time. And if I can ever answer any questions, feel free to reach out. Have a great week, and we'll all talk soon. Take care.